Hello, good morning. You're watching ET Now this Friday morning. I'm Anisha Jain. With me is Nikunj Dalmia. And this Friday morning, we're opening up to a very classic risk-off move across the globe. There's a bit of a sell-off across equities, and it's the US 10-year Treasury yields, which has spiked as much as 10 basis points. And all of this is having impact back home as well, because yesterday we saw that the market took another tumble. It was another day of slide of almost 200 points coming in, though by the end of the trading session, we managed to recover almost 100 points from the day's low. But if you look at the broader markets as well, they showed a bit of an outperformance because they managed to eke out positive close for yesterday, while the frontline index was on the back foot, and even the cues coming in with respect to the FNO and the FI aren't very supportive. Nikunj, do you think the worst of the drawdown has happened, or do you think we're likely to stay around this range and maybe consolidate for a while?
See, you've got to establish what's happening, right? I mean, now you can look at the market in isolation this week and say, okay, it's been one of those weeks which we've been calling out for. It's been a week of a very sharp reversal. Yes, it's been a tough week to call, and it's a week where you've seen a little bit of skim from the top, but in percentage terms, it's not even 5% for the Nifty. In fact, if one looks at the intraday graph of the Nifty and the Bank Nifty, we did see a mild recovery from the day's low. The broader market closed in the positive. A combination of small and the mid cap index that really closed in the market. So what are the trends telling us? Nifty is adding fresh short positions, and there is long unwinding in the market. If one looks at the Nifty Bank, so it's not that everybody is in a sell mode, so to speak. What has triggered this decline was the decline or selling, or this sharp reversal in the market, I think was overdue, and that has got triggered largely because of global factors. Global factors are not that bad, so I would imagine that market in the near term, at least benchmark indices, are likely to get some support. The support levels are there on your screen. So the way I look at the market narrative, Anisha, is that this trend, this upward momentum in the market, that has hit a pause button. The downside in the market is not going to be very pronounced. The market correction is going to be very torrent. That's a typical bull market correction, very sharp, very swift, and by the time you realize the correction has started, the correction gets over.
Yeah.
A bull market correction is very sharp, very swift, but by the time you realize it, it is actually over. So we are going through a bull market correction. I see the setup moving in the following way, which is the market will now hit what could be called as a range. The downside in the market, or the direction in the market, could be a downward bias. The upside in the market, which is closer to 20,000, I think could take some while before we achieve out. That's a simple sum and summary. I'm not scared with the fall, but globally, since things are not falling apart, the downside in the market, I think, will get limited and restricted. I don't think this is a time to buy it. Let the market settle down, and I think the market will settle down in a few days.
Okay, so that's the clear commentary coming in that it's still a bull market correction. It might be a bit sharpish, it might be a bit swift, but that's still the bull market correction. Not the best time to buy right now because let it consolidate, but nonetheless, the market might be in a slow grind. And it's the global market as well, which is in a slow grind, and that's what we have seen for the last trading session. The US market has been on the back foot. Yesterday as well, we saw a close of around a cut of around 66 points on the Dow Jones. But separately, what is making the biggest headlines across the globe is the fact that the bond yields have spiked quite sharply, and that's the biggest headline, of course, Nikunj. We have been talking about how over the last 1 month as well, the bond yields have been inching higher, but overnight there was a very sharpish move, 10 basis point higher on the 10-year yield, and telling you that there's a bit of a risk-off sentiment, and now getting a thumbs up from even Warren Buffett, who's going ahead and buying 10 years.
No, so let's understand what's happened in the 10-year paper. I think the bond yield, when it moved in 2022, it had peaked out at 4.4. I'm talking about a 10-year paper. Now it is at 4.1. But the underlying inflation and the growth dynamics, I think, were completely different. And with bond yields moving at 4.1 largely because of what's happened to crude prices and Fitch rating, I think it's a slightly is slightly exaggerated. So this kind of a spike in bond yields is unlikely to sustain, at least that is my view. But you got to be a bit watchful, because when bond yields it starts moving higher, automatically it means that this whole narrative that inflation has peaked out permanently and interest rates will go down in a hurry, I think that narrative will get clearly challenged. I don't think there is anything to be scared about the setup, but you got to be a bit watchful, because that risk on trade, which had in a sense contributed to a parabolic move in US equities and a lot of other asset classes, that will get challenged, specifically to Buffett. Now, of course, this is something what he's spoken to global media in a written statement to a lot of global media. Buffett has said that I dismiss what Fitch has said. I continue to maintain that dollar will be the reserve currency. And in terms of an Berkshire Hathaway commitment, we bought into bond yields. That means that they expect the 10-year paper somewhere or the bond yields actually to come down. So that is the view which is coming from Buffett. So frankly, the Fitch episode, what we thought was a no event, and now the who's who of the US financial world they've actually dismissed it. They've completely shrugged it off. But what that entire episode or that entire communication has done is that it has given a spike to the bond yield, which surely will have an impact both in the short term and the near term on growth stocks, on risk on assets, and how essentially a little bit of liquidity would move.
But one risk on and growth stock which is not showing any sign of slowing down is definitely Zomato, right? Because you're talking about growth stocks, so that's the stock that comes to my mind, Nikunj. What a stellar performance that the company reported yesterday. First time ever reporting profitability. Yes, it was a meager 2 crore, but for the new age tech world, just the fact that they've managed to report profits was a big takeaway. And all of this has been liked by the street as well. If you look at the brokerage commentary this morning, that was also quite positive. CLSA has maintained the buy. They've maintained the buy stance. They've hiked the target price to 105 now. They're saying that the delivery on profitability is well ahead of time. JP Morgan is also maintaining that view, and they too have hiked the target price by 10 rupees. Do you think, Nikunj, this could be another re-rating trigger of Zomato? Because of course it's run up already from 45 to 90 almost, but from here on, could it now see a further re-rating?
You know, it's early Diwali for Zomato shareholders, and you got to doff your hat off to Dipinder Goyal and his team, that for a company, for a business where everybody thought that they will never ever make profit, the fact that they've been able to turn around the business. See, growth was never a problem for Zomato. It was about how are you essentially growing and what kind of cost efficiencies you are essentially putting at bay. The fact that they have a cash-rich balance sheet at a time when you got the real threat which is coming from ONDC, you managed to grow and you managed to cut corners. Zomato has turned profitable. I mean, that I think is a different kind of a narrative now. So the narrative for me, for Zomato, is now very simple. Same time last year we were asking, will they ever make profit? Now the narrative is, how much profit will they make? In the forward guidance, they've indicated a growth of 40% for next 2 years, which I think on that kind of a base, I think is very commendable. So the narrative now changes for Zomato. From what was the narrative for Zomato? Okay, it's a high growth business, but we don't know when will it make when will it make profits. Now the narrative, it's a high growth business where cost efficiency has kicked in. The 3 engines are kicking in very smartly, which is the food delivery, the dine out business, and also the Blinkit business or the grocery business, and now they can really grow. Anisha, once you understand the dynamics which are in your favor in terms of cost efficiency, size and operating leverage, it's a high growth business where things essentially are going to be completely different. Now stock has done up. Everybody is excited about in terms of a 15 rupee price target up or 20 rupee price target up, but I don't know what will happen today because of the recent run up. But directionally, I guess this, we've been talking about it. Our thesis was that this business will come back. I think the business is making a comeback. But does that mean that all other consumer fintech companies will bounce back? Is there hope? Is there a belief that what Zomato has done, can other consumer and fintech companies will do that? I think that for me is the bigger narrative. Can a Paytm do it? Can a delivery do it? How soon Policy Bazaar is going to be walking on that path? So now there is going to be a belief which automatically will come via markets that, okay, these guys know how to manage cost. They understand the profit, language of profit. And a lot of, the old timers in the market, they've simply dismissed these guys off.
Yeah.
Oh, it was great growth, but show me the money. My friends, it's time for you to realize that for some of these companies, not all, the promoters are capable of turning the ship around. I think for me that is the biggest hurrah.
Yeah, because you're right. There was, I think, yes, that's the best way to look at it in terms of the overall sector, whether the profitability will return. Because people had written off whether these guys are just entrepreneurs who enjoy doing their business, but they're not that concerned about profitability. They'll burn out cash because they've been getting a lot of liquidity. But now there's a semblance of being very, very cost efficient, and that's what was visible in Zomato's number. Not only the top line was strong, even the cost that they managed to control was definitely something, and probably that will be the read-through for the rest of the sector as well. But what's a read-through coming in from across the globe? Because there have been big comments that have been made overnight, of course, right from Buffett to a lot of others talking about the Bank of England rate hike as well. Let's go across to Winnie to get a gist of all of that.
Absolutely. Good morning. Buffett's read was also there, which was an interesting word that came in from him as well. But let's move on and talk about the other global comments that we have. And we had the Federal Reserve Bank of President of Richmond over there, who is Thomas Birkin, had said that, greater than expected easing has come in terms of the inflation in the month of June. And that may actually start indicating that the US economy can now have a soft landing and returning to the price stability without actually seeing a damage in terms of damaging the recession as well. Other comment we have is coming in from Peter Schiff, and now this is on the treasuries. They're highlighting that treasuries have actually started seeing a collapsing as oil prices are surging. Now the critical markets to watch out for, what he's highlighting is saying that dollar as well as gold are something that one should keep an eye out on. And furthermore, he's saying that, once the dollar falls with treasuries, gold rises with oil, the party is over, is what he's highlighting, and say goodbye to the soft landing and brace the impact of recession. Higher inflation is equal to a crash that is coming in there. And so different commentaries coming in from both these first global commentaries that we're seeing. Now, lastly, we have a comment that is coming in from Mohammed Al Arian, and he's talking about the Bank of England rate hikes and how he said that there is a three-way vote split this time around. Now, whether this is a strength or a weakness, now what he's highlighting that, what he sees, that he thinks of it as a strength because it communicates the complexities as well as the uncertainties that are there associated with the policy movement, as well as it also signals wider range of potential outcomes. So he sees this, even though there's a vote split, he sees this as a strength that works out.
All right, now Kunal is ready and Nuresh is also ready. Gentlemen, good morning. Nuresh, good morning.
Good morning.
I can't hear you, Nuresh.
I think you can hear me loud and
Now
clear.
I can hear you. Now, good boy. Okay, Nuresh, what is in store today?
So again, the consolidation should continue. The first target on the downside was done yesterday. So breaking below 19,550, 600 opened up a move towards 19,300, which was the last cluster. And that now remains a short-term support. So for now, it becomes a case of the range shifting. Ideally, if we were going into a deeper correction, there should have been more follow-up and breaking down below 19,300 faster. So for now, we expect a bounce towards 19,450 to 550 range. And once that happens, then review whether we can sustain above those levels. The only case, the reason we do not look at a major correction as of now is because most of the index names do not have a similar structure like Nifty. You have a HDFC Bank, which has not crossed all-time highs. You have a Kotak Bank, which is still 20% away from all-time highs. So a lot of the index weights do not have a chart structure very similar to the index as such. So in that case, we could continue a consolidation and we get into a new sector rotation. So start to look out for stock-specific moves in the index heavyweights. We are seeing oil and gas take a lead. We are seeing smaller banks taking a lead. So for now, it is more stock specific. Index could continue in this range of 19,300 to 19,550 for at least a couple of sessions.
All right, Kunal, good morning.
Morning.
Gale mein kharash.
Yeah.
Big slow.
Early morning.
You remember that ad?
Yes, of course.
Classic ad, but it's Friday, I think, so that's why just getting into that mode, right?
Hopefully, and hopefully if the market also gets into that mode, then I think it adds out.
Is this a bull market correction? Very sharp, very swift, very turbulent. And before you realize it, it's over.
Yes, it is. Because, in an actual turnaround, you wouldn't get a time to exit the stocks which you're holding. So in this, leg of a trend in the last 2-3 days. We saw first 200 points correction, very slow, gradual on the index, and then the last 200 point correction on the index from 90,500 to sub 300 mark, which we hit yesterday. The pace of correction intensified. The stock started to get into a sharper swing on the downside. There was some news flow which was attached, which created some sort of, if I can use that word, panic for many market participants that maybe the best could be behind for the markets. So when all of those reasons come out at the fag end of a correction, that's generally a time when we typically call it as a bull market correction, because either a bull market reversal or a sharp reversal doesn't give time to exit. Now the most important point was at the 90,800, 900 mark, the premium for the index futures reduced from 140 points. We started off the series at 140 points to almost 80-85 points, and on the way down yesterday when the Nifty was sub 90,300 mark, the premiums actually shot up back towards 110 points for the Nifty, and in fact it jumped from 150 points for the Bank Nifty to 250 points on the Bank Nifty. So that generally indicates that the flow for the market participants was on the bullish side yesterday, sub the 90,300 levels, and that's where we've bounced off on the indices. I would expect that 90,300 should now be a decent short-term support, and we should hold on to that level.
Okay, so 19,300 is a bit of a support, but it's definitely a bull market correction, so need not get worried. But what are the top stock recommendations coming in from our chartist? Naresh, you go first.
So first is a buy on ONGC, which is setting up for a longer term breakout. Has made a strong base around 150, 155 levels. 170 to 180 is the big resistance band. A huge cup and handle formation in the making. With oil prices also sticking up and making a breakout, this looks like a good place to be. And once it sustains above 175, 180, it should set up for a new trending move, which would be a multi-year breakout. A buy at current levels, the stop loss at 165 and initial target price of 190. Second is a buy on Kotak Mahindra Bank, which is a reversal trade. The stock corrected from 1950 down to 1800 and lower levels. Yesterday was the first reversal candlestick. So keeping a stop loss at 1780, expecting a slow and steady bounce towards 1950.
That's the trade setup for you. I just want to, go back to the global setup once again. Fitch downgraded US rating, and nobody has really come in support of that, from Ellerian to Warren Buffett to JP Diamond. All of them are saying that please ignore Fitch. Please ignore Fitch. Even the Fitch is saying what is obvious. Now, frankly, the Fitch rating is not having a really large selling stampede, so to speak. Dollar index 102, but it had gone to 102 before the downgrade. Bond yield is where you could ask yourself is that if the underlying inflation conditions are not that rampant, why is bond yield at 4.1 and crude 85.3? Even the Saudi Arabia or I think it was OPEC talked about Saudi cut, right?
Yeah.
I mean, Saudi has
voluntarily cutting their
so Saudi are looking at cutting $1 million from their quota.
Correct.
Saudi has about 17-18% market share, global market share, and OPEC has about 80. That means about 6-7%
in the total.
In the total, not actually less than 5%, which is not actually much if you frankly think about it.
But I guess given the way demand dynamics are shaping up, even a 5% will have a bit of an impact. Let's see how it pans out. Of course, crude has been on the steadier side. $85 per barrel is where it is trending at right now. But coming back to the stock markets and getting the stock specific recommendations, Kunal, what about you?
So I'll go with two buy calls. Bajaj Finserv is the first one which I would suggest as a buy. The stock has already corrected 10% and more in the last 2 weeks. So expecting the stock to bottom out, indicators oversold. Targets of 1540 for Bajaj Finserv, stop loss at 1460. And Voltas, apparently this stock has already found a bottom in the last 3 days. The stock has in fact risen from 760 to 800 plus where it closed yesterday. So expecting this contra move to continue for Voltas, 830 as a target on the upside, stop loss at 785.
Okay, so those are the stocks on our chartist radar, but what are the stocks that you should watch out for? We have Samit joining us in the studio to talk to us about that. Samit, a couple of earnings that we're expecting today, M&M as well as SBI. But before I come to you, Nikunj, actually I wanted your take on M&M in terms of the EV deal that happened yesterday, the valuation, everything. What do you make of it?
See, they don't need the money. They're cash-rich balance sheet. On a cash-rich balance sheet, why are you doing another deal? So I think that in a sense is just an endorsement of where the world feels that the EV business is moving. Frankly, unlike Tata Motors, where they launched their EV vehicles, they got TPG after the launch. And when they had a reasonable amount of,
Steadiness
steadiness in the foundation, they had learned from that Indiga experience. You could see the green number plates which had Tata logo to it. That's the time the TPG deal was done. With Mahindra & Mahindra, their launch is still a distance away. And yet they've managed to do one more deal on top of a deal exactly a year ago, which Aman had gone to cover. It must be a nice experience, by the way.
Well, yes, it was definitely a nice experience.
So that for me just says that they are getting definitely some amount of acknowledgement for the brand which they represent.
Yeah. And there has been a decent uptick in valuation. Of course, not a re-rating which one would have expected after the surety of the pilot, but 15% nonetheless, from
decent enough
70,000
given
to
the fact that they have
80,000
not
crore.
launched anything so far.
Fair. So what's brokerages making of that? And in terms of the earnings today, what's the street expecting?
Well, on the earnings front, the numbers are expected to be good because volumes were on the higher side, tractor volumes were stable, raw material prices were stable, and they have also been able to gain market share. But other than the earnings, the key focus when M&M numbers come out would be on the press conference, and that is where the analyst or the street would want some clarification on why they have bought this RBL Bank stake. Now, if you see from the peak, share prices have fallen by around 7% because the company went ahead and said that they have bought around 3.53% stake in RBL Bank. They also met RBL Bank management and they are aiming to take their stake up to 9.9%. But the key concern here is the capital allocation going wrong for Mahindra & Mahindra at this moment? Because that's the biggest concern on the street, and the clarification on that front would be something that the street would wanting, and that's on how the stock would react more of, if you see, because valuations is currently a bit on the lower side compared to the 5-year average. The 5-year average stands at close to 15.9, while the 12-month forward valuation is just at 15.6. So valuation is not expensive at this moment for Mahindra & Mahindra, but it is the clarification on the RBL that will be much more important and something that the street would be wanting to know when the numbers come out.
Surprising, I would have assumed that the valuations would be at least at par or higher than the averages because the stock has run up quite a bit, but given the cycle, I think it had taken that much beating as well. But Nikunj, for M&M, this is something we've been talking time and again. As a group, they have been doing a lot to improve their capital allocation, weed out the bad businesses, focus on the right ones. This RBL Bank, what do you make of it, and what should we expect today, if at all anything?
I mean, from everybody I've spoken to understand, who understand M&M's trajectory, this is something which has come as a bit of a surprise. That for a company where you are talking about capital allocation and you've really worked hard to improve your capital allocation, if there is no strategic move for them to really invest into RBL, then why are they doing it? And if this is a strategic move, then what really could be that strategic move? Because you already have Mahindra & Mahindra Finance, where you tried for a banking license and then you said, okay, thank God we've not got the bank license, because a bank license means that we'll have to get into a different regulatory environment, a different kind of a process. So by just... And they're looking at what about, if they go up to about 10% stake, it would be a 1500 crore investment. So this is just not in treasury operation. If this is not in treasury operation, why stop at 10%? Because corporates will not be allowed to own more than 10%. Is this an indication, is this an indirect indication that, okay, there would be synergy benefits which would come between Mahindra Finance and RBL, but is that really something which you really want to focus on, given that there are a lot of other businesses which are firing full cylinders and you work really hard? You work really hard in getting your capital allocation structure right. So I want to understand. I'm curious. Everybody is curious. Right. Trust me. Everybody I've spoken to, they've said everybody is curious. Yeah.
Okay, so at least one management has managed to surprise us and surprises us quite a bit, because it's difficult to understand what they're trying to do with RBL Bank right now. They've purchased about 3.5%.
Everything that happens, people have a reason.
Yeah, usually they find a reason.
Yeah, they find a reason. Everybody is very smart. They give you yes, not a ye hua tha, wo hua tha. Right now, nobody is giving me a real, complete, very logical reason. So, I think the clarification is more important than the numbers today.
So 1:30 p.m, I think that should come up for you. That is when the management will speak to the media, and these are the questions that we will pose for you here at ET Now. So wait by and watch at 1:30 as well what the management has to answer regarding all of these questions with respect to capital allocation. But the other one that we'll be watching out for with respect to earnings, and for that management you'll have to wait by till 2:15, because that is when Mr. Khara will speak about SBI's earnings. But what is the street expecting from this mega PSU lender? Somit, tell us.
Well, on a YOY basis, we're expecting around 30% growth, but on a sequential basis, obviously the numbers are expected to come off a bit. NII number is something around 40,000 is what the street is expecting. PPOP, that is pre-provisioning operating profit, that number is expected to come in at close to 24 to 25,000 crore rupees. Again, a growth of around 88% on a YY basis, but a sequential decline of close to 3 odd percent. But it is the NIM number that is the most important to watch out for when SBI numbers come out. Now, the street is expecting NIMs to be around 3.4%, which is a dip of around 20 basis points. But if the number comes, but we'll have to watch out for how the NIMs perform, and that is 20 basis points is what the street is expecting a decline on a Q on Q basis. Now, in the fourth quarter, the company's NIMs were at around 3.67, which was the best ever net interest margin reported by SBI. So we'll have to see how that comes in, and the second number to watch out for would be the slippage number. Now, street is expecting the slippage to be anywhere between 9 to 10,000 crore rupees. So any surprise on both these factors, that is slippages and NIM, the stock would most likely react on these two.
Okay, let's watch out for that because PSU banking names were having a good run of late, Nikunj, and you were the one who we kept on saying the elephant could dance and has been dancing at least for the last 1 year. Do you think the dance is likely to continue?
Elephants can get tired. You don't have to dance 24/7.
So that's what you're expecting, a bit of a pause?
I'm not see, you have to understand that what large banks, you have to look at the size of the economy. If the size of the economy is doing well, a bank will do well. SBI is India's biggest bank. HDFC Bank and ICICI Bank, they have the second and third largest balance sheets. I'm talking about SBI biggest before the merger. Post-merger, of course, HDFC Bank becomes the largest. So, if SBI and ICICI Bank, they both have, if HDFC Bank and ICICI Bank and Axis Bank have given good set of numbers and credit growth is strong, you know that numbers will not be bad. The question is that how have they managed cost? And that is something which is a variable factor in the short term. Even if there is a bit of a miss, I think that would be temporary, because the way the subsidies for SBI are moving, I think you need to recognize that, whether it is their personal finance, whether it is their home finance business, whether it is the mutual fund business, whether it is their insurance business. They are like a mighty force to reckon with, and I think stock is still very cheap if I look at the absolute and the quality of growth what they've done. Beats done nothing. Unlike HDFC Bank or a Kotak Mahindra Bank, I think last 1 year, in this year, I think Kunal, ekdam flat hai, right? SBI is flat.
Yeah, SBI I think has come back to flat.
Oh, after the gain, it's again flat.
It's done nothing.
Negative 3%.
Oh.
Yeah, can you imagine?
In fact, that is because of the last 2-3 days fall that we have seen in
it's done nothing. So the positioning of SBI, I think, is very neutral.
Yeah, it's
Even
not
if
that
there's
it's
a
going
bit
very
of
heavy into the earnings.
so even if numbers are a bit of here and there, even if they are, I don't know, even if they are, you would say that the stock has not participated. Unlike a lot of other PSU banks, Kunal, please bear with me.
Bank of Maharashtra, Canara Bank.
No, Canara. Bank of Maharashtra is small. Look at Canara, look at BOB. Those stocks are up 100% in last 1 year.
Correct.
Yeah.
At least 60%. So
On a
to
YTD basis, Bank of Baroda I think has done better out of the three, 4% plus.
So YTD basis, Bank of Baroda, 1 year change would be 70%.
Yeah, 1 year change is
And even Can Bank would be something very
correct. The stock was at 165, I think 1 year back.
Yeah, and you look at SBI, 1 year change must be 25-30%.
Interesting. So those were the big moves as far as PSU banking name is concerned. But to the point that the subsidiaries have been doing well as well. I think, Somit, there was a note this morning on SBI Life as well, right? Talking about it positively from Morgan Stanley.
Yes, Morgan Stanley came out with this tactical report where they're saying that the SBI Life share prices have actually underperformed HDFC Life and ICICI Pru. On the other hand, the growth is not underperforming. The growth is still at par with its larger peers or its private peers, I would suggest, ICICI and HDFC. So they're expecting some kind of an upside in SBI Life share prices.
Okay, and all of this will have an impact on the parent as well. Thank you so much, Somit, for joining us with that discussion on M&M as well as SBI as well as their subsidiaries as well. But time now to get a take from Dinsha Irani as well of Helios Capital, what he has to say regarding the new age tech story.
Point is that longer term, these stories will play out perfectly. In fact, the new age companies that we own as such. But so as I've said earlier also on your channel, what do you look for in a platform? Basically, these are all platform companies. They offer a platform which gives you convenience. Is that an option of converting? I mean, caching that convenience? Yes, right. If there is, are there enough users for this convenience? Yes. But is it easily replicable? I think that is the last question that you need to answer, which has to go in the negative rather than the affirmative. If that is the case, then you want to own that company, and that's why we believe that the ones which we own are fairly non-replicable as such, and we've seen that in global trends also. The first mover advantage is definitely there in these kind of plays. But we are also saying the fact that valuations at some point in time become screaming. I mean, as in not Rather, it's fairly overvalued and stuff. So we'll be very cautious at those levels. We've actually trimmed in certain names, but we're waiting for some time correction to happen before we go and pick those names again. Be very clear about the long-term potential of these stocks as such, and we'll probably do that.
Welcome back. Well, we're in the thick of the earnings season and a lot of earnings that came post-market as well. We should pull up the report card to tell you how the performance has been overnight. It was a good set coming in from the likes of Novelis, so that means a positive Q coming in for Hindalco, especially in terms of the margin performance because volumes were a bit subdued there. Eicher Motors too, a bit of a surprise coming in on the operational front, and the management is quite confident about the competition as well, that they will be able to manage that. Separately, Radhiko Khaitan, LIC Housing, these were the other names that we were watching out for good earnings, and Lupin managed to report a 10% growth on the India business, and that should be liked by the street. Bharti Airtel, JM Financial, KC International were broadly in line with expectation. For KC International, there's a bit of a worry regarding the margins and the balance sheet, but given the kind of performance that we have seen on the top line, I think that should be negated. Can't say the same about Gulf Oil and Deepak Nitrite because a very weak set of numbers coming in. In fact, for Deepak Nitrite, if I have it right, the profitability was down as much as 30 to 40% on a year-on-year basis. For Cummins, the street is a bit divided because the domestic business has managed to report a decent set. The gross margin trend is also okay, but there's a softness in export revenue. So I'm watching out for Cummins. That could be the interesting one today. Whether that dip gets bought into Cummins or not will be important. There's a con call at 10 a.m. So we'll watch out for the management commentary on that. But talking about management commentary, that was very strong of Eicher Motors. It reported, of course, a 50% jump in the net profit, much better than what the street estimate was. Let's go across and listen in what the management have to say about the performance and the competition threat.
We're no strangers to competition. Of course, competition hasn't done very well in our segments, but we're no strangers to competition. This is certainly one new wave. It so happened that there's a couple of chaps that came together, both as contract manufacturers, mind you. Maybe not being able to compete directly. So both really coming in as contract manufacturers for other brands. I'm talking about the Indian partners. But either way, there are new brands in the market as we speak, and of course we really take heed to what's coming in. We spend a lot of time, energy, effort in understanding. But as you understand, all the work that we do at Royal Enfield is done with a very long-term view. There's nothing we're going to do a new product that's going to change in the next couple of years. Our new product, which is going to come out now in the next year, had been planned 4 or 5 years ago, typically. So, but what we've always done at Royal Enfield is while we look outside, we've created market, right? We've created market. To be fair, we are building a fortress, right? It's not easy to penetrate. Of course, there are small pickings here and there, which, people can try and get at. But overall, we don't worry about competition. We don't obsess about competition like in fact our competition does very often. We obsess about the consumer. We obsess about what the consumer wants, what we can obsess about all of that, about stuff that we believe is tangible reality for our consumers to have a better ride, to have more enjoyment. So yeah, really we've built a fortress. It's not going to be easy for, let's say, robbers to penetrate, as it were. And we keep it real. We keep it motorcycling. We keep it absolutely real.
Okay, so that's about Royal Enfield, likely to open in the green, got a thumbs up from brokerages as well. But the other one that's getting brokerages and sanguine commentary from the brokerages is Hindalco, and that's because its wholly owned subsidiary Novelis has reported a decent set of numbers, and it has attracted the strong commentary from the management as well. Sesha is joining us to dissect the numbers.
Well, yes, Novelis, which is Hindalco's wholly owned subsidiary, reported largely inline set of numbers, but the management commentary is quite positive. On a sequential basis, spreads, that is adjusted EBITDA per ton, has risen by about 11% on a quarter-on-quarter basis, and higher auto shipments than usual is what led to the beat as far as the spreads are concerned. As far as other internals are concerned, shipments have declined on a quarter-on-quarter basis. Volumes too are on the lower side, and that is because of lower demand that came in both from the beverage can segment as well as from the building and construction segment. But as I mentioned, the commentary was quite positive. They believe that the worst is behind us, destocking is now behind us, and that volumes could recover from here on. As far as adjusted EBITDA per ton is concerned, it could be in that $450 to $500 range for the third quarter and could be beyond $500 per ton in the fourth quarter. As far as capex is concerned, they undertook some capex in the quarter gone by, because of which the debt position has deteriorated marginally in this quarter. Meanwhile, we also have a couple of brokerage reports that have come in. Macquarie, for instance, has maintained its outperform stance on the stock with a target price of 516. They say volumes disappointed, but they expect gradual recovery from the third quarter onwards. CLSA has also maintained the buy. They say first quarter profitability was well ahead of what the street was working with, but volumes were soft this quarter. All in all, numbers are in line, but the management commentary is quite positive.
Okay, so that's the take coming in on Hindalco. But what about the entire metals pack actually? Naresh, would you be a buyer in any of the metals name given the kind of moves that we have seen across the globe, the dollar index and everything?
So one has to be selective in metals in terms of the stocks which are doing relatively better. So Jindal Steel is the one which continues to be the best one in terms of the trend. So that is first. Then you come down to the next one, which is JSW Steel, which has again done better than the rest of the steel names. So Jindal Steel and JSW Steel look the most interesting. In terms of a contra idea, there is NMDC, which has started moving out from the bottom, made a double bottom around 105 level. So NMDC would be the next one. But for now, I would stick to Jindal Steel, JSW Steel as a trade. Jindal Steel has taken a little bit of a dip in the last two sessions. So that becomes an entry point at 640.45 with a stop loss at 630.
So those are the top bets coming in from the metal pack. But what are the top bets coming in from Sanjeev Bhasin? Listen in.
Top holding has been Ultratech, and we added during the chaos of Adani both ACC and Ambuja, and it has richly rewarded. ACC Ambuja combined have a 55 million ton capacity, and you can see the aggression. They are acquiring smaller players. Pricing is back, and I think Ultratech with 128 million ton capacity is going to rule the roost. So we think cement prices are going to harden after this monsoon, and you know the monsoon has been rather severe, but I think it's abating now. And I think price rises will be across the board. Look, construction and infrastructure are the best plays now. Cement consumption is at an all-time high, and it's only going to get better. And I think if you are in pedigree names like Ambuja, ACC and Ultratech, by the way, as a disclosure, is our top holding along with the other two.
Numbers were a bit soft for Shoppers Stop, largely because when you sort of look at the overall share of private label, that is intact at about 14%. Now, the challenge is that the companies have been offering higher discount because the overall sales have been tepid. And that, along with that, there has been a store addition, so that sort of impacted margins. I think we are yet to sort of see a revival in the overall retail sales. So I think that remains a sort of a challenge in the near term. But structurally, I think we like the retail space as a overall, and I think if Shoppers Stop is able to sort of increase the proportion of private labels, which is a high margin business, I think things will look a lot more better going forward. But near term, we don't see much of a price movement given the results.
Right, time to say hello and good morning to Sandeep Sabharwal. And I must say that even though they say that try, you will succeed, I'm trying from last 1 year, I failed, Sandeep. Guess what I'm talking about?
Getting him to office.
Breaking the wall.
Convincing you to come to office in the morning. 1.5 saal se I'm trying.
First, you need to break that wall. Then I'll come.
I'm happy to give you a ladder and a rope actually. It's much easier. One day we'll show that wall, the famous wall which Sandeep talks about, almost like Great Wall of China.
Yeah.
It's really high.
Just saying, everybody keeps on saying the wall of worries and the market is climbing that. The market can climb the wall of worries, but not Sandeep. He can't climb that wall which is there between our studios and his home.
That's a good one actually. Wall of worry. And
It's like
Sandeep is
that.
not.
It's like that Berlin Wall.
That came down one day. That came down one day. Okay. This market surely has managed to climb the wall of worry in April, May, and June and July. What's next now?
So I think now markets are facing some headwinds related to bond yield movements, because the more the bonds yields move up, the lesser the valuation ideally of the equity markets should be. And to that extent, what we are seeing globally is that some capping of the movement on the equity markets. Now, whether this bond yield movement upwards sustains or not is something we need to see, because people got used to too low yields of bonds. And even now, if you see in the US, if the Fed funds rate is above 5% and 10-year treasuries at 4.1%, still it's lower than that. So I think some uptick out there. So those concerns could remain in the near term. But overall picture for equities next couple of years seems to be fine to me, especially in India, where I think economic growth prospects continue to remain strong.
Will you be a buyer, and at what level you would say that this bull market is giving me another good entry point? And if you will buy, what will you buy?
So I think in the near term, my personal view was that market should remain fine till September. Then October, November, we get some sort of a deeper correction. So if we get a deeper correction, which I would say, say markets moved up from 16,800 to 20,000, that's a 3,200 point move. So if the markets give up around 1,000 points of gains, then I think we could be looking to start buying at that stage in terms of fresh allocation.
Sandeep, I wanted your take regarding Zomato, because there was this famous meme doing rounds that you would rather buy tomato versus Zomato. Now, tomato has reached the price of what, 150? It's likely to go up to 300, and Zomato too has. There is that report that's saying that the wholesale traders are saying it will go up to 300 rupees per kg.
So 150 becoming 300. So यहाँ तो
वहीं पे invest कर लेते हैं.
Buy 5 kgs of tomato every day, 300 rupees. I read an article where someone said that, a lady actually carried 10 kgs of tomato when she was going to Dubai.
Yeah,
so
even
coming
I
back
have.
from Dubai, coming
yeah,
back from Dubai.
Have that there are people who are carrying it internationally as well. But
And
tomato
Sandeep and Seema Bhabhi has already stopped giving him ketchup in the morning. That Sandeep was telling me, right, Sandeep?
So are you ordering in?
Much of ketchup in any case.
So nonetheless, this war of tomato versus Zomato, I don't know where the prices are headed, but what's your take on Zomato?
The results are encouraging, and to that extent, we've also seen that reflected in the stock price up move, where the stock actually moved up from 50 odd levels to 85. Now, the management has given a very aggressive guidance on what they will be able to achieve over the next few quarters, which looks slightly optimistic in the context of the consumer sentiments that we see today. So if they are able to deliver that, then I'm sure the stock will move higher. But I would like to watch that, because achieving that kind of growth which they are targeting is going to be very tough in the current environment.
So Sandeep, now my point is that if Zomato has turned around, now the whole conversation would be with others turned around. And there was a time when everyone thought that these companies will never make money. They will always have a negative cash flow. There will always be a fat loss. So if Zomato can turn around, do you think there could be some belief that others could also turn around sooner than later? Because the attempt by Paytm or Delivery or Policy Bazaar is that they want to now seriously walk on the path of profitability.
So I would think that where the companies which will find it tougher will be Delivery as well as Nykaa, because Nykaa has its own issues going on with management changes and lack of clarity of what they actually want to do. And Delivery is facing intense competition, and in terms of let's say core competence or differentiation, it doesn't offer too much. So Zomato and Nykaa actually were the two which would be viable for me at some stage. So Zomato, unfortunately, we never bought because my earlier view was at 50 odd levels it should be a good buy. But when 50 came, I didn't feel like buying, so I never bought, and now it's run up. So I'm not buying at these levels. But if they achieve sustainable profit growth and constant quarter-on-quarter improvements, then the stock prices could trend higher and we will get more opportunities.
Okay. I'm going to switch gears and talk about Mahindra and Mahindra stock, Sandeep Sabharwal, which you track with a magnifying glass. Now, numbers I think happen 4 times in a year, but the fact that they've picked up 5% stake in RBL has happened once in a lifetime. Do you think that is the single most important factor from today's press conference? Why? 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 Why have they bought into RBL, and what will they do?
I think a lot of questions will be asked, but my guess is that it will be like I don't think they're going to give so much of clarity. I think they'll just keep some stiff upper lip on that, and I think it's a small part of the total profits that they generate, and to that extent, markets have given disproportionate attention to that. They are doing well on the auto side, on the tractor side, they've been gaining market share and indicating that things will improve further. We saw Escort's results which showed significant improvement in margins. So if Mahindra is also able to replicate that, then I think the stock could still do well.
I'm going to just scan through a lot of other stocks. And Nuresh, is there merit in now perhaps thinking that, okay, the best of the auto gains in the short term, that's behind us? Because we did see a bit of a skim from the top. Is the uptrend in autos now nearing its end, Nuresh?
So I think it's getting into a pause. Some of the names like Tata Motors went up from 400, 450 to 630 levels. Coming back to 580, 600, spending some time over there would be normal. So the view is auto has gone through one trend and now we are going into a consolidation, and that has happened multiple times. So if you look at Mahindra and Mahindra, it went from 700 to 1000, then 1000 to 1300 to 1500. Then it stayed at 1300 odd levels for months together and then made the next move. So I think we are getting into a similar pause for a lot of auto names. Does not make the longer term trend change, but there could be new leadership coming in. So some names like Ashok Leyland, which have breakout after 1.5 year, crossing that 175 mark. That would be a new leader. Hero MotoCorp could be the surprise pack, which has consolidated for multi years. So the case is the auto rally longer term is still positive. It's just that there should be a shift of names.
Okay, so that's the take coming in. But Sandeep, what's your view regarding Eicher Motors? Of course, it's seen quite a bit of drubbing after that entire competition threat came. But yesterday, Siddharth Lal was saying that we have built a fortress and we're not worried about competition.
What's happened is that last 4 quarters consecutively, the company has been able to beat expectations, and that also by a significant margin. And that got actually reflected in the stock price movement also. So all these competition threats could be real to some extent, but I think, like Siddharth Lal has said, that it will be tough for other players to come in and take huge market share away from them in the near term, and they might also evolve. But I think that overhang in the minds of investors will still remain. So I would think that despite such good performance in terms of pure stock price movement, I think gains in the near term might be muted. We need to watch out for their further developments on newer products, how they move on the EV front, etc., and then see how it goes.
The other one I wanted your view on, Sandeep, was Cummins, because if you look at it on a standalone basis, the company has reported a profit growth of 59% year on year. The revenue has gone up by 31%. Domestic sales is higher by 43%. But the street is still calling it inline set because probably that is what they were expecting. What do you think the valuation of the stock tell you in terms of what the move can likely be? Given the fact that last quarter also we had seen very volatile move on this one post the earnings when the company had decided not to give any guidance.
Yes, so this time there's no case for big volatility, I think, because results are more or less in line with expectations. However, I think like many other industrial stocks, especially pure capital good companies, the run-up has been very, very significant. So after such a significant run-up, the stocks, even to sustain, need good results. So So my guess is many of these companies which have moved up sharply, which include ABB, Siemens, Cummins, etc., they need to now go through a phase of consolidation, and subsequently they could move up further. But in the near term, it's tough to justify significant up moves given the valuations of these stocks.
1881. I'm just scanning through the list of gainers and losers, and pharma is now consistently coming right up there. Pharma is consistently right up there. Not that any pharma company has come out with blowout set of numbers. I don't remember Sun. What happened in Sun? I don't remember.
Sun was a decent set coming in, slightly below, slightly above expectations, and Lupin as well last evening was a good set.
The Economic Times today is reporting that the Cipla promoters may be looking at exiting, and this is a story which the Economic Times today is reporting. Another media also reported pretty much the same thing, and that I think really would be very, very interesting, Sandeep. I mean, if the Hamid family decides to sell their entire ownership in Cipla, which is what the newspapers are reporting this morning. It's a company which it's a family-owned business which is shifting from one generation to another generation, and it's a company which has a lot of respect. But the fact that promoters are looking at exiting, that means that either they think the business has stopped out, or the P guys think that the best is yet to come for a franchise like Cipla.
So I don't think it's an issue of the promoters thinking that things have peaked out. I think there are more issues which are internal to the family, etc. So if this deal happens, and this deal has been speculated for the last 10 years. Now, I don't know whether it's going to happen or not, but if it happens, it will be a huge deal, and it will be sort of, and Cipla is not exactly a cheap stock. So a private equity coming into Cipla at these prices with a majority stake would be a vote of confidence on the future prospects of the Indian pharma industry.
Well, yes, and just reading through what the reports are saying, the non-binding bid is likely to be next week itself for the 33.5% stake. This will trigger an open offer as well. And at the current market value, the deal size could be well over $6 billion, making it the largest PE buyout in the country. So this is not a small one. Watch out for this one. If and when it happens, this could be a large one brewing as far as the entire pharma space is concerned. But pharma space, Naresh, a lot of candidates which have been doing well. But is it time to probably book some profits or churn your portfolio in pharma itself? What are the top bets within pharma?
So a lot of pharma names have already run up quite a bit in the last few days. The bets are, could be looking at ones which have started turning around. So the surprise pack which comes in the radar is something like a Laurus Labs, which has given a breakout. You have a Wockhardt Pharma, which is giving a breakout. Then you have Sun Pharma, which is the largest name, which is actually given a breakout. But any dips going forward, it should be a buying opportunity because the stock is coming back to the same prices where it was in 2015. The stock had topped out at 1200 back in 2015. It's been 8 years. The stock has done nothing. So a dip going forward, 2050 to 1100 zone, Sun Pharma could be the most interesting name because a stock coming out of a 5 to 8 year period could surprise on the upside. And then the other pack would be to look at names on the side which have bottomed out. So I would be looking at Wockhardt Pharma and Laurus Labs as such.
Sandeep, if markets correct because of macro concerns, whether it is crude, whether it is yield, whether it is US interest rate environment, what happens to IT? Because IT is in a downtick and in a time when global markets have done rather well. If the economic downturn, if a macro sell-off happens in US, that means the US economy will slow down further. So then what happens to a sector like IT, which already is in a doldrum?
Yeah, so I think there will be further downsides to earning expectations because the earning expectations of analysts are still too high for this sector. Macro concerns are growing, and what also happens is that many of these CEOs, they also watch the data. They see bond yields moving up so much. They feel that demand will cool down, etc. And then they don't want to spend on discretionary. They want to conserve cash. I think all that, a part of that has played out. A part of that is still to play out. So I think we need to monitor this sector as to when we want to buy into it. So right now, I don't think it's the time to buy into it. We could actually see that next quarter when these companies talk about their guidance, we could see further cuts.
Okay, Sandeep, what's your take regarding Dixon Tech? That stock was high by almost 8% yesterday. On a YTD basis, that stock is up 15%. And the brokerages this morning have written the note on the latest move coming in regarding the import ban. And Investec says that Dixon could emerge as a very significant beneficiary. You have Jeffries saying that the amendment could be viewed as a very strong step to push indigenization and could be very, very positive for the EMS space. Do you think this could be a further re-rating trigger for the entire electronic manufacturing stocks?
Yeah, could be, because it's a move which could effectively restrict nearly $8 to $9 billion of imports. Obviously, companies will get their licenses and many of the established companies will be able to import. But I think at the lower end, we'll see more of manufacturing start to happen in India. So all of these companies could get a fair share of that.
Well, 4443, Dixon, Amber, Keynes, Sharma SGX, this entire space in a sense has been on a very strong tear, so to speak. Now, let's look at what the setup is here. And I'm going to give some perspective to our viewers here, something what I've learned from Manish Chokhani. This is not my original thought, I must admit it. When Maruti came to India with Suzuki, it led to an entire creation of an ecosystem within the car manufacturing space, whether it is, especially in the auto ancillary space. When GE came to India, it gave birth to the entire IT sector per se, and then post that you saw the birth of Infosys, you saw the birth of other IT companies and call centers, they started mushrooming up. Now, if Apple has come to India, could that lead to a complete birth of a electronic manufacturing system or electronic manufacturing supply chain? India has already become exporter of some key categories of smartphones. Apple is manufacturing in India. Apple has indicated they want to make iPads in India. Now, the latest move by the government where they want to restrict the use of tablets and laptops to India means that the global brands who are importing laptops into India, Indian government clearly wants that if you want a customer, you have to invest in the country. You have to make sure that you create a job. That is one thought. Second, this also could give birth to a lot of local brands in India. We know that Jio Smartbook has come out with a very affordable laptop. So sometimes necessity is the mother of invention, but when you know the technology wave is changing in China, one is at play. These are the moves which in a sense are going to be game changing going forward. And given that how much we are importing in terms of electronics, only second highest after oil, this is something which will surely have a very deep root impact. So Sandeep, if that is the spirit that India is moving firmly, smartly and strongly in the entire electronic manufacturing ecosystem, these stocks may look expensive today, Sandeep. I mean, Dixon, Amber, Keynes, Sharma SGX. But if the growth highway is so strong, is it like buying IT in 2000? Is it like buying pharma in 2004 and 5?
Very tough to say, because contract manufacturing is not like a branded product or a product which you own, and it's a low margin business. So to what extent, what kind of PE you want to give these companies is something people need to decide. Secondly, I think I was slightly contrarian you on this, that we cannot manufacture everything in India. Like, if the government thinks that everything we want to consume we can manufacture in India, then the entire concept of global trade, what happens? Because then what are we going to export? Like, then other companies also believe that other countries could also start putting such restrictions. I think we need to watch this space. We cannot be competitive in every industry, in every segment. And but in the near term, as far as electronics go, obviously there is a momentum which is building up.
GIFT Nifty and pre-open rates will come in a second from now. They're indicating that we're in for a bounce. So Kunal, you were talking about a bounce between 230 and 330. You said 5 times bounce, and you were playing for the bounce. Are you still playing for the bounce?
Yeah. Well, still play for a bounce, and in fact, Nikunj, yesterday what has happened is there are two things. One is we discussed the premium point, that the premium for the index futures, both Nifty and Bank Nifty, that shot up. That's very rare, because premium generally shoot up when there's either a short covering or when there is a consistent move towards building long positions for the index, because you know that you're closer to the bottom, so you would probably want to chase the futures more. That can yield you better returns, more leverage returns over the short term. The other way to look out for is most of the stocks and large cap names, mid cap stocks, the ones which rallied late in this leg of the markets, metal stocks, etc. Most of the stocks had come back into oversold territories of their respective charts. Whether it's, as I said, in large cap stocks from the auto pack, large cap stocks from the banking names, financial services stock, metals, etc. So there's bound to be a relief rally into that overall market breadth as well. So on the back of it, when you look at the risk reward, when you look at the setup for the index as well as stocks, it always makes a lot of sense to go with the tilt when there are the maximum probability is on your side. So I would believe that in that regards, one should play for a bounce for the index.
Okay, the stock which I think Anisha I just want to discuss maybe with Kunal and Naresh both is actually India Bull Housing Finance. And look at the relative move here and look at the absolute move here. Last 1 week has been puffy duffy, shaky, volatile, choppy, all over the place for the markets. But India Bull Housing Finance last 1 week change please. My producer will fire up. It is 30%. Naresh, what's going on India Bull Housing Finance?
So the stock has had this history of such violent moves. And the fact is the stock has corrected all the way down from 1400 levels back in 2018. Even in 2021, when there was some deal which happened at 230 levels, the stock corrected. So now it has started making a comeback. What is interesting is the volumes on the cash side have been good. And it has outperformed on the days when the markets have not really gone up as such. And now the stock is crossing almost a 1-year high. So looks like some deal is in the working or some announcement which should come in. Or markets have started betting on a revival here. Problem is the stock keeps going into derivative bands, so it becomes a difficult stock to trade on the derivative side as such. Today the stock gets out of derivative band, could see some more volatility, but overall technically the stock has changed trends in terms of price and volumes. Could surprise on the upside if this holds on to that 150 mark on a closing basis. It opens up a target all the way to 220 levels.
Okay, let's take the mid-cap strategies as well from our experts then. Kunal, what's the top mid-cap bet?
Well, that will be a buy on emphasis from the mid-cap IT name. The stock has seemingly formed a good base or a support at the 2,200 mark. It yesterday managed to see some bit of recovery in the second half. So would suggest a buy on emphasis, 20 to 90 as a target, stop loss at 2,200.
Okay, an IT candidate emphasis at that, where A and Kunal is expecting a target of 20 to 90. Naresh, what about you?
Buy on Wockhardt Pharma. The stock has seen a recent bounce in June from 170 to 250 levels. Then consolidated between 230 to 250, making a classical flat formation. In the last 2 sessions, it has given a breakout about that 250 mark. Good volumes day before. Yesterday also there was some follow-up. The stock has closed well above 250. Looking at it as a short-term trade with a target price of 300, stop loss at 244.
Okay, so time now to get you the news from across the globe as well. Chinese tech giant Alibaba has announced its own artificial intelligence model to third-party developers as company aims to increase the use of its product and take a leading role in technology. Remember, this move could pit them against US tech giant Meta, which had made a similar move and had posed a potential challenge to OpenAI, the firm behind the viral AI chatbot ChatGPT. Pakistan Prime Minister Shahbaz Sharif has announced dissolution of the National Assembly on 9th of August. The Prime Minister will send formal advice to the President for the dissolution of the National Assembly. According to the constitutional provisions, the President must sign the advice within 48 hours to effectuate the dissolution. Meantime, back home, Blackstone is all set to submit a non-binding bid as early as next week to acquire the promoter's entire 33.4% stake in Cipla, according to the Economic Times report. This will formally start a process which could see the eventual exit of the Hamid family from the company they created back in 1935. This could, remember, also trigger an open offer for 26% more stake if subscribed.